All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for June 4th, 2024. We'll start with the sniper trade of the day. This is Alcoa on a 3-minute chart. All right, so this was yesterday's close. Here was the big gap down opening. So off of that opening, I put an R10 box. And took the breakout short and had this is an R5 box. So each one of these boxes is an R10. And I'm using the full R5 as the trailing stop. So I'm short. That first bar was explosive down. Now we get we don't get the turning point in the R10 till here. So this is where I'm going to jump stop the stop to the skin of the dragon. And then get the exit shortly thereafter. Somewhere around 2R. I re-entered that short when the R10 rolled over, and that makes this a COTA 2. And I'm using the same size R5 box. And you'll notice that I have the skin, the spine, and the upper skin of the dragon as my protection here. My stop is up here, though. Here's where the R10 reverses. And this is where I trigger the exit and I get filled here. So I get basically a scratch. I get that little fraction, but not much there. That reversal was very sharp in that bar. I'm sorry, this is a 10-minute chart. I'm sorry. This is the PSAR flip. That triggers an SSC. Here's that same standard risk to the bottom of the PSAR. It works out that the R5 was exactly the size of the PSAR flip. And now what you can see is that there's a convergence of these indicators. There's the SMA 30 coming down, the VWAP meeting, the rising RL10. So somewhere around in here, there's going to be a meeting of the minds. And one of 5 things can probably happen. Explosive move up out of that critical state, a sideways grind that goes nowhere, scenario 3. And then scenario 5, immediately sharp reversal that looks like this after this momentary recovery. And we would add in the size of the gap as part of that decisive move downward. And then some intermediate things where it might slowly grind or reverse with a grind. So every time I see these critical states approaching, I am trying to be mindful that these 5 scenarios are always in play. And price is going to go where it will, as dictated by the unknowable size, intention, confidence, and purpose of the market participants as they adopt a position of either buying or selling, or both if they're a trader. So I see that little intersection coming, and I'm going to try to be ready for it. And it looks kind of like just that sideways grind. And if I were to classify that as which one of those scenarios that came out of this thing, it looked like 3. Nothing to see here. It didn't do 1, it didn't do 2, it didn't do 4, and it didn't do 5. It just kind of did that. So exit before the close and cash a little fraction. So a little over 2.5 hours for the day on that one. Check or hold. All right, so this is DIA, our other running buddy, and 10-minute chart. Sorry. So this was the run up yesterday that terminated way up there. And then this is the gap opening down here. And then this is the OR10 in that blue box. So I'm going to be ready to go short. And that actually is nice because that's below the SMA 30 and it would have broken the PSAR. So any downward movement, I want to be short. And I'm prepared to be long if it breaks out above that, particularly if it can get above the peak of the RL10. So I really want to trigger on the first one if I can. Check or hold. It breaks out. So I put my R5 risk box on it. The R10 rolls over. So I take the skin of the dragon exit. In the usual place right here. Check or hold. And if that's 1 unit of risk, that's 1 unit of reward. Now it breaks through the PSAR and the VWAP. So let's just track and see what it's doing here. So I've got the R10 rolled over. It crossed the RL30, so that's a P1 regression line crossover where the 10 crosses the 30. And the MACD histogram goes from summer to fall right here. Skin of the dragon is violated. Spine of the dragon is violated. The PSAR is violated by price, and it closes here. In the next bar, which opens here and ticks up a little bit and then goes south again, I get short because I'm below the VWAP. I'm below the skin of the dragon. I'm underneath the PSAR. Now, notice the PSAR doesn't flip yet until the RL10 crosses it, which it will do in this next bar. So the PSAR is going to flip in the next bar. And when it flips, it should go to about here, where it is equal to the peak of the RL10. But I'm executing here on price. And I'm noticing the SMA 30 as a target, and I've put my standard R5 risk box on it, which is the same size as this one. Check or hold. And notice that the PSAR flips where we said. It grinds a little bit here, breaking to new lows. Now, this is key. And as Jay likes to point out, when the R10 crosses, the RL10 crosses the SMA 30, and it's below the VWAP, and the PSAR has flipped, and the RL30 has rolled over, as well as the RL10, that's a sign of downward pressure. So we're not allowed to be surprised if it were to come all the way to the low of the day, which is here. And then this would be a test price. If this thing comes to that critical state, we would then expect 1, 2, 3, 4, 5 as 5 different scenarios that could unfold. And that's if it comes back to this clearly recognizable compound critical state. But it has had a nice run up. It has pulled back to a rising Bollinger Band mean. So this actually also is a critical state. And from here, we wouldn't be surprised at 1, 2, 3, 4, 5. That's how that works. The confirmation of an upward move would be associated with the breakthrough above the intraday VWAP, which is right here. That's sort of the 50-yard line intraday, that anything north of that has a positive feel and anything below that has a negative feel. Check or hold. So we're right at the R10 is on crossing the Bollinger Band mean. We got some rising lows and declining highs. That's as a nice a test as you could want. And now I'm evaluating this and saying, there's my short entry, and here was the initial risk that I've taken, and I'm now holding this much. I'm going to show it in green as money, as my money, in red as my money, which is about maybe 0.3 or 0.4 of an R. So I got to decide, is this a place to go to no lose plus dinner for 2? And take my risk, which was here, and bring it down to the skin of the dragon, spine of the dragon, and the VWAP to break even? Or should I go to like a 1-bar high and lock in this gain? Let's call it no lose plus dinner for 2. So I'll ask you, on your piece of paper, commit 1, 2, 3, 4, 5, Now, to me, 3 is problematic because I would have exited with a tiniest little fractional loss. It's not even a clear signal that this is over, and it's barely a signal that it could rebound. But I understand 3. But if I'm going to accept this little loss here, why not just move that to 5 and say, let me have the same thing but in my favor, and give it 1 bar. You got 1 bar to make a fail, or I'm going to get out with a little taste. And to me, exit 4 where you just scratch is like kissing your sister. Why would you do that? With nothing to show for it? So to me, 3 and 4 are problematic. To me, 5, if I'm thinking about this being the potential turning point of this could go here, it could grind, it could go sideways, then 5 is the only one that allows me to get even a small return on my investment for taking this speculative entry here on the short side, after having seen a really strong upward move. So to me, 5 is a good answer. And then if it breaks down below this little low point here, like if this price, which is here, turns and goes this way, I'm going to breathe a sigh of relief and say that, oh, maybe there's another leg down and it can come back, as previously noted, to this point where I got to go through that same critical state gyrations altogether. And that the fact that it could go here is the reason I just don't get out here and lock in that move. Would you be wrong if you did that? No, you would not. You would not be wrong if you did that, because you're the judge of your own decisions. I end up getting the exit where I'm supposed to. After the RL10 turns, I'm supposed to jump my stop down to the skin of the dragon, which also coincides with the Bollinger Band mean, and I cash this little, whatever that is, 0.3. If you don't want 0.3, send it to me. So now here I am. I've got a set of rising lows, price, and the RL10 have broken through the declining PSAR. In fact, because the RL10 goes through the PSAR here, it should print down to here when the PSAR flips again. So I get long. And then there is my standard risk box, same size as these two. That's the R5 risk box, checker hold. And now it's a tactical trade until it gets above the peak of the RL10 and the PSAR. This is just a tactical space. And the only thing I'm trying to do in my tactical space is get my risk from here to just above my entry so that I can lock in, say it with me, no lose plus dinner for 2. In the same way that I'm happy to cash whatever it wants to give me, I want to get my stop from here to here in this tactical space until I get a breakthrough above the known most recent resistance level. Check or hold? Now we're going to test. So now I'm testing that upper limit. Here's the test. Now, what could it do from here? You should be thinking, it can always do 5 things. It could go 1, 2, 3, 4, 5. So if my closing price in that bar is right here, then what I have for open profit is this. And if that was my unit of risk, and this is my unit of reward, just by eyeballing, that feels like it's pretty close to +1R. Check or hold. So now I will ask you, what is your average R winner? If your average R winner is 0.5 and you're holding +1 and you're approaching a critical state, where do you put your stop? At the skin of the dragon and the Bollinger Band mean and break even, position 1? You better say no, not there. Do you put it at the spine of the dragon for no lose plus dinner for 2? Skin of the dragon, 1 bar low, 2, 3, or 4? Or do you just preemptively take it at 5 as an above average win? I like 4 to lock in that much and give back only that much. But your mileage may vary. Skin of the dragon is fine. The skin of the dragon is not bad because the RL10 hasn't even rolled over. The only reason I am preemptively moving to here instead of here is because I don't mind getting paid that extra piece if this fails. And it's approaching an area where failure is unsurprising. And if I have to wait for the RL10 to reverse and then invoke the skin of the dragon, it's probably too late. So I have to at least be at 3 and reasonably at 4, which is where the skin of the dragon is going to be in about 1 or 2 bars anyway. Fair enough? So let's just say, let's just look 1 or 2 bars into the future with our little brain and say that the dragon is going to persist like this. Would you agree with that? So if I just said, in order to respect the 1R that's in hand, if I just preemptively just say, you know what, I'm just going to jump stop to here and I'm going to follow that for the next little bit until such time as the peak resistance is broken. So from here to probably about here, I'm just going to use that rising. It's not even. It's a forward-looking trailing stop, if I can say it that way. It is requiring to stay in this trade that price continues to move according to this logic right here. The logic that brought it this far has to continue through that space in order to not be taken out. So I don't want to see, as long as the buyers do not weaken, then my little red line stop is not going to get hit. Check or hold. And then the price that tells me I've gotten out of that critical state is when it gets north of that line. That is a change in psychology if it does that. It says that if it can get north of this line, then all the buyers who failed over here and let the price decay, those guys are holding firm and staying with the energy that's pushing it up. So, in conclusion, my thought process on this is that I'm just going to, because I'm approaching the critical state, I'm just going to project the skin of the dragon forward. And until this line is breached, I'm going to use the stop in here as my guide. And in the worst case, in this next bar, it opens here and then comes down and I have to exit here. And then I get to make this. And that's going to be my worst exit. My worst case exit in this scenario is I'm going to make that compared to this amount of risk. How many times a day do you want to be in that position? All the time. I want them all. So all of that effort was for nothing. Because it just broke above. So now my stop, if I'm following through on my logic, my stop is right here because I'm at the peak. Here's where the price is opening. It's right at the test. Here's the 1 bar low. That's so close to the skin of the dragon. Would you agree with putting your stop right there and locking in this gain? Anything wrong with that? Nothing wrong with that. Oh, I ran out of upward room. Good problem to have. So now I have this problem. Crap. Now notice that when the test occurred, you had these small range bars until it got right to the test. And when it did not fail there, in other words, the buyers who bailed out on it here last time that caused the price to, they did not bail here. In fact, more buying pressure came in and it surprise spiked up to here. So at that critical state, it can do 1, 2, 3, 4, 5. I don't know if it's case 1 or case 2 yet, but it's already better than 3. It's either 1 or 2. So this is now some exuberance and my stop was here, but price is up here. I got to say, how much of this is mine? Well, the way I think about that is this. If that was the test and this is a new double plus yummy good, I'm going to make sure that I don't give back any of this money by having my stop below. So I have to at least be here. I'm probably just going to split the difference and put it there and give the price, which is right here. I'm going to give it that much room to giddy up go. Fair enough? Good problem to have. You have to ask yourself, if you had this trade and you just successfully breached the test, are you really going to give back all of this exceptionally good candle and let it come all the way back down here and exit down here? Are you going to reject that gift? Are you? I'll say, oh, let me keep half. Let me respect the gift and let me lock in this extra little piece and let it speculate with that little piece. Check or hold. Now, your mileage may vary. I'm just talking about how I look at it. Fair enough. So now I've got 2 bars of joy. So you saw this little thing coming together right here to the choke point. And what I had was big move, and if I was willing to, I wanted to keep half of this good bar, how about I just take this one and say, let me keep half of that good bar? Any objection? So ordered. I wasn't even that good. I took the skin of the dragon. Now, notice that this keep half would have gotten me out here. I waited till the RL10 rolled over and then jump stopped to the skin of the dragon. And the difference was that much extra loss. I was happy to cash that game, but I gave back that extra little piece. So you got to live with your consequences of your choice. I look at it this way and say, philosophically, I made this much on that much risk. That's about 1.2. And I might have had 1.4 if I had had more precision on that exit and captured this extra piece. So as you're checking for the fit psychologically of your exits, this is what you got to do, is to say, is that enough of a difference to make a difference? I have a very easy to compute skin of the dragon exit. What was significant was that I was at a gain that was better than average. So this was already a double plus good trade for me once it gets past 1R. And so I'm satisfied. I've decided that I'm satisfied with the skin of the dragon exit, particularly if I'm trading a lot of symbols open at one time. If that was the only symbol that I had going at the time, I might have been better on this. And then here's what that looks like. If I take the exit here, I then have to be prepared for a breakout above this line to get going. So what I find is that I'm actually willing to take this, give it a little more confidence in the sell-off and the break of that little 2-bar low or 3-bar low. I don't mind this trade. It stops me from getting prematurely re-entered. But really what I want to see it do now is, if there was enough time in the day, I'd be looking to see, does the PSAR hold along with the skin of the dragon? Does this thing reverse or reverse or reverse? Any one of those three within the next 3 to 5 bars is a reasonable reentry as a COTA 2, because I have a rising Bollinger Band mean, a rising VWAP. I'm above the previous resistance. And then I set the top of this RL10 as the next test, where I have a lot of confidence that the move is occurring. But as long as the PSAR holds, I'm willing to take all of these as potential COTA 2 reentries. So I get paid, and I'm immediately stalking the COTA 2 tactical reentry. And it's not until price gets below this rising VWAP that I adopt a negative bias. Check or hold. This is Constantine. He's trading a $3 million prop account. Trying to optimize his qualities here. He gets short on a collapsing dragon with a standard risk box to the top of the PSAR. Check or hold. He comes down into the test and then collapses again. He adds a second position finally, and he gets this, and he exits here. He exited the second position here because he wanted to lock in the gains, and he exited the first position here for a total of 7.3. And this is in the gold futures on 5-minute charts. Check or hold. Just like downtown, there was more available to him here too. Here he is on the NASDAQ futures. Same account. There's his collapsing dragon. There's his wrist box, slightly above the PSAR flip. Nothing wrong with that. Straight collapse, reverses and exits here for 5.2. And he's trading this one on the 30-second chart. This is no place for a nervous person. But that's what 5R looks like. And that's about 10 minutes. Here is Brian on the Euro US dollar on 5 minutes. I think he stayed too long on this trade. He should have exited as he noted here. And that red dot should have been the stop and reverse, which it was. And then a second position, and they pay off. He tries this as a stop and reverse and then does not stop and reverse here, but he should have. And so after being out of alignment, he gets done. He doesn't get this one. He doesn't get that one. So he's going to forgive himself. And recommit to study system, self, and markets, and get those things back in alignment as a professional. And let's respect the trend. This should have been an instant stop and reverse. This one should have been exited early in reverse, and then we'd have been aligned, and it would just reinforce those messages, and you'll be fine. You have a nice cushion built up 35R in 50 trades. Yeah, so that was Brian. Was this Brian also? Oh yeah, here he is with a fractional in the gold dollar spot, and then there's this one. He was not at the keyboard, so he didn't get that one. George smashing EWW on the 10s. There's the OR3 breakout. Skin of the dragon exit, which we said we like. The re-entry, he cuts it quick. 1.3 for the day. Double plus good yummies. Gets paid and gets a micro loss here for 0.7. That's a good day at work, George. This is Jonathan. So the open is here. He tries that long, cuts it, takes the SFC short. 0.88. Yeah, we might have stayed too long on this one. When it crosses the VWAP, we might have just improved that slightly. And we might have gotten short in this little pocket here rather than this. And that changes a micro loss day to a micro gain day. There was an opportunity here where winter becomes spring and the PSAR flips. A lot of work going on in here in EWW, and I think the risk box size was too small, and so that caused you to be much jumpier than you needed to be. Like we should not be getting out of this one. We should be able to enjoy that to here. Look at George's chart. This is a reasonable entry. I prefer this, but that's still okay. That's a great cut. And then the short would be here rather than here. And I would still get out there. And I would still get short there and get out here. So I think we just got to fix the risk box. Sundeep brings in 2.5 on DIA. This is DIA on 3 minutes. He tries this one on the breakout, cuts it for minus 0.5, re-enters, makes gains, re-enters, exits, looking good. This one, this like 1, 2, 3 in here, we either got to get that as the owl that has rolled over, or we got to get the breaking of the Bollinger Band mean. I feel like we need that. Or if we only want the long side, then we got to say that's the exaggerated sell off to the Bollinger Band mean. And now I get this. That should trigger you for the Kata 2. This harsh sell, success, micro pullback, and then recovery. That should trigger you for a really nice Kata 2 with a tight stop that allows us to quickly get to no lose once we exceed the previous peak. And this is the previous peak. So if I can get my tight stop in here, and I can get my Kata 2 entry here, then I should be able, I won't lose any money on that move. Because at some point in here, I'll get my stop up above 0. Okay. This is Kevin on EWW. This is on the 3 minute. Here's the OR3. He gets long. This is where he gets long on the 30-minute chart. Gets paid nicely, cuts it quick, micro gain, little late getting in, cuts it quick, nets 1.7. There was a little bit of improvements available. He's framed out the breakout from the side, the Z3 pinch. It never followed through, so no trade. 1.7 for that effort. And then on the 10-minute, I said the 30-minute on the other, I meant 10, I'm sorry. So this is the 10-minute entry. Skin of the dragon exit, and then it never gets out of the Z3 pinch channel. So 2.2, that's as straightforward as you can get it. So that gives him a total of 4 combined for the day on that. So really nice work, fellas. We'll do a quick look now at the reports. On the 150-day look back, oops, sorry. Still pushing the top. There's your 10-day box, your 30-day box, your 150-day box. We're in the fireworks stage of that thing, still trying to go. It's understandably stalling at that higher point as we try to find new people to buy, but we're going to see the COTA 2 is coming into focus. Easier to see on the 30-day look back. Now, what I've added here, just for convenience sake, is I've added this thick red line at the top that's anchored to the peak. Oops, sorry, that should be red. Pardon me. Yeah, that's anchored to the top of the RL10 and the PSAR. So it has to break north of that to be of interest. And then on the bottom part of the channel, I put that green line where the belly of the RL10 has found support. So really this whole space between the red and the blue, this is the tactical space where on a daily bars, at least, it's fighting to see which way the breakout's going to go. And you can see now that the daily price for today's little daily price action was in this boundary. And it closed here. So it was at the top of today's price, and it's about in the midpoint of this tactical space. So it only has to get through here to be really good, and it only has to fail below here to become really bad. And then if it fails, it's coming back to the Bollinger Band mean and the 5 and 10-day low. And if it collapses there, again, 1, 2, 3, 4, 5, the little starburst planning, let's call that starburst technique for anticipating scenarios. It's got to be one of those 5 things. That's all it can do. Now, keep in mind where those red and green lines that mark off the tactical space. When I drop down to the 30-minute, you can see where those lines are projected now. This is where the peak of that RL10 and the PSAR were on the daily chart translated down to the 30-minute chart. So that's the price that's got to be exceeded. And then that support line was, this is where that projects to from the daily. So as long as price is in this region, north of this line and moving up, it's in the tactical space, but experiencing some improvement, and it's above this previous peak. So that's good. It just has to cross that tactical space and then test at 533. And that's where it goes strong, grinds, slips sideways, reverse grind, or collapse. That's the next critical state. So tomorrow we're going to see, does it get above today's high? That would be good. And then what does it do at that critical state? Otherwise, on the downside, you have the 10-day VWAP, today's VWAP, the 5-day VWAP, the 3-day VWAP. So that's actually a nice little recovery. And we'll see if it can get out of this mess and get through the tactical space and then free and clear. And that's an all-time high. So we like that. That would be fireworks to the upside if that can happen. And if it does that, if NVIDIA isn't leading the way, I'll buy you a can of soup. All right, that's the quick tactical look from the health checks. Bullish normal, strongly overbought. Volatility is neutral and ready to go in either direction. A couple buy on dip opportunities. Mid caps ought to be looked at. Some clear winners today. Coca-Cola, when it is breaking out on all four of those dimensions, you got to go respect Coca-Cola. NVIDIA, yay. Walmart, double yay. Coke and Walmart. Need we say more? Still lots of things to choose from on the auto framer, and some 551W patterns and some triple screens and so forth. But Coke, Walmart, NVIDIA for follow through tomorrow. Look for leadership there. ETF tactical, some weakness in Brazil and Latin America, and oil. Not much to choose from. Lots of auto framers available because of the recent sell-off, including some favored trading names like Caterpillar, Brazil, Energy, Diamonds, small caps. So whenever I see that many are on a significant distance away from their 10-day high, remember that takes a retest of the 10-day high. So if this was the sell-off and today's range was this ratio reports how many of today's ranges are between the high of the day and a return to the 10-day. So that would give you a ratio of 3-to-1. Brazil is at 7.5-to-1. So that's my automatic interest. But there's so many to choose from. What might you do? Well, you might consider at the same time on the next one, the daily squeezes. And this combines that auto framer reward to risk ratio column, but it also sorts it by the range stat divided by mechanical risk. And so these are the ones that are poised for how many range stats there are between their price and the 10-day high. So to me, Tesla, Dow, are all looking pretty good. And I'd be ready to get any of those. The top level, what I've highlighted there is this top level stack of favorable reward to risk and the most tightly squeezed gives me that short list of things that I'm really prepared to trade. Any breakouts above today's high, so Tesla, DuPont, Technology, McDonald's, Caterpillar, and ExxonMobil. I'm noticing Coke, Tech, and Disney, Brazil. Even the S&P is not bad. So tomorrow still is poised for a nice potential move. This one gives you the TC 2000 version of the reward to risk ratio and my standard trading stack, my personal trading stack. So CAT, Brazil, Mexico, regional banks, tech, Devon, and the Dow. Yay! Microsoft. Yay! Even Tesla's trying hard. And that red line differentiates between better than 2-to-1 on the 1-day pop reward to risk ratio. All of those columns are defined over here if you find that chart to be of interest. So that's your operating manual. And I like Alcoa there too. And McDonald's, not bad. Especially Alcoa after a horrible sell-off. Great American company. Yay, like it. Being dominated by winter and fall. Logical. More sell-offs than there were happy faces today. But notice Walmart and Coke and McDonald's actually were standouts today in the Dow. So Walmart and Coke, they have the advantage of all this green goodness. McDonald's more of a underperformer, but has recently been coming on strong. So that's my kind of value play. And then these are ones that are poised. If there's more collapse tomorrow, I'm short them so fast. Real estate, little stealth move there. I see you. Metals and mining, that helps account for the weakness in Nucor and Cliff. That's a sector-wide phenomenon. When that reverses, all of them are going to do well. So if you watch metals and mining just as an oscillating sector going in and out of phase, can't I just figure out how to buy in the spring and sell in the fall and ride the cyclic wave of that whole sector as its own separate little tradable target? Yes, you can. Yes, you can do that. And those trends last for days and weeks. The trading value list, the usual suspects are still in there. Tesla, marijuana, Nvidia, clean energy, Intel, CAT. I like it. Metals and mining and Microsoft, Devon, beauty. I think we're at this critical state right here where I'm ready to follow the leader in any direction from that breakout. And the reason I read that is I see the longer term enthusiasm beginning to decay as we move towards the elections and war. That's not favorable calmitude for long term. That's just more volatility, and that's not good. And the RL30 has rolled over. Now, the only saving grace in this one is that the 10 experienced this little rebound and is trying to buck the trend. That's what it would take to make this happen. But if the longer term heads are cautious and worried, we're going to see that. So this is a very short term fragile market. Let's be ready for that. All right, that's everything for tonight. A lot of good lessons in there in the bar by bar analysis and discussing exits. So that's actually a lesson that I'm going to add to the foundations. I like the way that sounded. So take good care, and we shall see you when we next see you.